Hey guys, Matt here. Welcome back to this week's Portfolio Update. I got a few things to show you and a question to ask at the end. So it starts here where I show you that we are down significantly from last week, and by the year, my portfolio has been trading sideways. I mean, not really getting much better despite the amount of money I keep putting in. I'm going to show you this right here before I get to the portfolio itself. Now, I have to zoom out a little bit. If you're on a mobile, you're going to have to zoom in or squint or something like that. This is the amount of money I've been putting in by the month throughout the year. And some months I've been putting in $1,500. Some months I've been putting in as much as $3,500. Like, I've been putting a lot of money into this portfolio by the year. And still, I mean, it started at it started at 65K, 68K, and we're about to end the exact same way. Like, I put so much money into here, and I'm about to end at the almost exact same amount. Honestly, it is either a very, very unlucky year or a setup for a very, very good 2023 with the amount of money I put into this thing. So here's a portfolio as it stands right now. Now, VOO dividends hit today, so this amount is blanked out. So that means that what you see here, the almost 20% loss, is actually even worse than this because I am down on VOO. So it's even worse than this. Absolutely terrible. Even with the, relatively updated today, like, we have a long way to go before this is anywhere close to good. We're talking 60% down on Jivo, 21.5% down on FedEx, 30% down on Meta, 37.3% down on Intel. Tesla is finally in the red again and keeps on dropping. Now, I know I probably should have sold back when I was in the green, but I didn't, so here we are. Now, I mentioned that a few videos ago that I was going to consider buying more Tesla if it dropped well below my cost basis, and it has. If Tesla hits $100, I will probably start buying some more shares again. Now, you guys may know, returning visitors to my channel, that I've been focusing mainly on the ETFs like VOO and SHD, trying to get that, trying to pump those numbers up. But Tesla, right now, as of yesterday, it's hitting a 4P of 24.6. So it is getting close to where I want. Well, not close, but in the ballpark. Now, as far as what I've been buying lately, now I haven't been able to buy much because, you see the boxes back there? I'm moving in a few months. I need to keep some funds liquid. So the money I've been putting in, I've been buying VOO and SHD. Like I said earlier, I'm focusing mainly on these two ETFs. I eventually want to get these to the biggest positions in my portfolio. SHD is already there, and I'm hoping to get VOO there in the next 6 months. Now, on to my question, because I want to keep this video relatively short. Now, I said a few videos ago that one of the lessons that I learned in 2022 is that if it's good enough to screenshot and brag about, it's good enough to sell. Now, I want to talk about Tapestry. Now, Tapestry is a company that I really love. Like, a lot of these companies I like more than, Jivo and Palantir. I make videos about Jivo and Palantir a lot because that gets me YouTube views. Like, I wish I could make a video on FedEx or Tapestry or VOO or SHD and have that get views, but alas, I can't. But anyways, let's focus on Tapestry. Tapestry right now is, even with it down as much as it is, like, it is close to its 52-week high. Not quite there, but close. Its 52-week high is 42.36. And I'm sitting at 161% gains. Now, I've been thinking about, I don't want to do it this year because, capital gains tax and all. But I am thinking about maybe it's time to take profits on it. However, Tapestry has become a pretty vital, I call it boring stock. And I mean boring stock as a compliment. It's a pretty strong dividend payer now. It's got 3.2% yield, which is pretty good. I own about 88.1 shares. It's a position that I built a few years ago. I never got to fully finish because it sprouted up as much as it has. As far as its performance, Tapestry has done really well and will probably continue to do so. It's a retail chain. It's an uppity retail chain, but it's a retail chain. Nice, boring, just the way I like it. It's got, increasing revenue. It's net income positive, decent balance sheet. Debt is pretty high. I'm not gonna lie. And according to analysts, we got some revenue growth in 2024. Tapestry, a boring company like that, it's not going to exactly 20% a year in revenue, but it's got an incredibly growing EPS. Like the net income is coming in. And for a stock that's, a dividend payer, that is really good news. We got analysts projecting 13.8% earnings growth by the year over the next 5 years. Like, that's pretty good. That's pretty good indeed. So Tapestry wouldn't be a stock I'd sell because, I think the company's bad or anything like that. It would be one where, okay, the stock has run its course, it's very successful, and I want to take my earnings, now that I have them. So yeah, Tapestry, fantastic stock in my opinion. I might hold it, I might not. We'll see what happens in 2023. But I am interested in your opinion on the company in relation to my portfolio. If you were in my shoes, would you keep holding? Would you buy more? Would you sell? Let me know in the comments. But anyways, take care, have a great day, and eat your vegetables.